Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a Ichimoku tutorial video. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so I'm going to unmute. Alright guys, so I am recording, so let's go over the Ichimoku multiple time frame strategy. So the MTF strategy, so essentially it's exactly as the name suggests. You're going to be using Ichimoku but on multiple time frames. Now I recently did a video that displayed the Ichimoku basic strategy, and that strategy can be applied to multiple time frames. And what that does, it really cuts out a lot of the losses you experience, and it also keeps you into trades on a smaller time frame longer. So you'll find that your win rate will go up and you'll also lose less money over time. Now, the basic strategy video I showed prior to what you're seeing here was a display of a poor risk management. Okay, so if you watch the video, again, you can find that video in the description below. I will post a link. That video does display that even if you have poor risk management, Ichimoku is so good at protecting you from bad trades in general that you could still make money. However, it is not something I recommend, obviously. This strategy will show you that you can have really good trades with proper risk management, and you will make just about the same amount of money or more because you're losing less. All right, so we're going to use Bitcoin as an example, and we're going to essentially have a situation. So let's say, let's actually go back in time here, right? So let's go right here. So let's say Bitcoin is trending up. Okay, so we're back in time. What is this? This is January 13th. Okay, so you missed the ideal entry on the daily, which was the Kumo breakout. So if you watch the basic strategy video, you know when you're above the cloud, you're above all the lines. So you have the Chico span. This pink line here is away from the candles pointing up. You know that this was the ideal entry right here. Okay, we're gonna mark it. This was the ideal entry right here, but we missed it. Okay, and this happens far more often than you would expect. You missed the day, you had work, whatever. What can you do to get in now if you believe it's going to still rise? And Ichimoku's telling you it's still going up. How can we get in? Do we get in right here? Absolutely not. You can't get in here because the risk, if you're wrong, is huge. Because when you get into a trade, you have to think, where will I be wrong? In this case, price can come all the way down here and you'd still be correct to be long, but your drawdown is too large. All right, so you need to protect yourself from that. So what you want to do is go down to the 4 hour or the 1 hour. In this case, you always want to go down to the 4 hour. You could do the 1 hour, but I recommend the 4 hour because you're going to have a better shot of being able to withstand any drawdown. I'll explain why in a second here. So as you can see, it's going up. So let's go forward in time. Let's go forward in time. Another leg up. Keep it going. And now you're starting to see a slowdown on the 4 hour for the first time. Again, you're still within the daily uptrend. Okay, that daily uptrend that started, you're still within it. So you're looking to hop into the daily uptrend, but get the best entry you possibly can with the best risk you can possibly get. Okay, you want to have the best potential risk management profile you can get. All right, so now here we are. So no longer are you in an uptrend on the 4 hour, right? You have the Chico span breaking into the candles. You have the Tenkan-sen, Kaizen-sen crossing. You have the candles under it. Your cloud is no longer pointing up. Everything's kind of coming into itself. Let's go to the daily time frame real quick. No, oh, that's the 1 hour, sorry. Daily. So notice the daily, get it pulling back. So imagine if you did go long this candle or this candle, you're already in danger zone because the pullback can be heavy. So you've stayed out of a potential bad entry. All right, so now we're going to see, will we continue the daily uptrend? Because unlike the 4 hour we just saw, the daily uptrend is still up. You have the Tenkan and Kaizen still pointing up slightly, the cloud is still pointing up, and the Chico span is still well away from the candles. So the daily uptrend is still intact. So let's go back down to 4 hour, okay, because we want to see, can we get a long signal off of the 4 hour to hop into the daily uptrend? Okay, so we're under the candles. So now what we're going to be looking for is the Chico span to break out of the candles. Okay, we want to see price get back above the Tenkan and Kaizen, so that's the red and blue line, and we want to see the blue line, the Tenkan-sen, have a bullish cross to the upside from the Kaizen. All right, as long as you're above the cloud and all that I just said is checked off, that means you could hop into a long and then follow the daily trend. So let's keep it going. See if we'll get that. Okay, we're coming up. Okay, we're trading at the Tenkan and Kaizen. Okay, Tenkan just broke down, but you're now above. You're still above the lines there. Let's see, will we get any upside? We're still in a range consolidation. Oh, and there's the signal. There's the signal. You have the bullish TK cross. You see that blue line crossing the red line. You have the cloud veering up, and then you have the Chico span breaking out of the candles. So this right here would be the long, and you're hopping into the daily uptrend that's still persisting. So let's go forward a little bit. So there you go. Very nice next 4-hour candle. Really, really nice. And now let's go to the daily real quick. So here's the daily time frame. So this is where you would have gotten in on the daily from the 4-hour entry. Okay, so you're able to still ride this daily uptrend on the 4-hour entry, and your risk would have been much smaller. So instead of where, let's say you went long over here, let's put a long little thing here. Bear with me. Here we go. So instead of going long right here, okay, and yes, you'd be up from here, but your risk would have to be all the way down here. So you're risking like 15%, and you're hoping that you have an extension higher. On the 4-hour, you entered over here, so your risk would have been much more controlled. So right here, you would be either having under the swing low or under the cloud right here. So you're looking at just about a 10 to 9% trade in risk. So instead of 15 to 20%, you're looking at anywhere from 10 to maybe, if you do the swing low here, about 5%. So way better risk, way better risk. And you can quickly, using the 4-hour trend, take away all the risk of your trade and move your stop to break even. Whereas on the daily, price would have to move up much more to get the Tenkan-sen, Kaizen, the cloud above your entry to where you originally got in. And so since you got in on the 4-hour, you're going to follow the daily uptrend. And let's see how it goes. So now you're going into a consolidation. So you could have taken profit off the Tenkan-sen or off the Kaizen, whatever you prefer, or you could wait for the cloud to break bearish on the daily. But if you held, so far you're sitting, and you're still going. This is not an exit because you didn't have an actual closure under there. Keep it going. And you're pretty much, we all know how this goes. You look pretty good. So you're pretty solid at this point. The 4-hour gave you a really nice entry. Now, you may have gotten taken out on this drop here if you moved your stop to break even, but if you didn't and you just kind of sat, you would have been rewarded. And even if you didn't, you could have re-entered here. Again, the smaller time frame would have given you the option, whether it's the 4-hour or the hourly, to re-enter along, even if you did get stopped out. So if you dropped here and now we're coming up, let's say you break up again, instead of just giving up, you can just drop down to the 4-hour or the 1-hour and wait for it to give you another entry. So like this candle right here, bullish break, you could have taken that entry, or you could have just waited a little bit longer, wait for all the lines to point up and hop in again, because you're following the daily uptrend, not the 4-hour. You're just using the 4-hour to try and get a better entry, an optimal entry, if that makes sense. So this works on both the 4-hour, 1-hour. You just have to pinpoint what your father time frame is going to be, I guess is the best way to put it. So the daily in this scenario is the time frame you're going to follow, but you have to pinpoint which time frame you're going to use to enter, and then you would follow this time frame. Okay, so you could do that using the 4-hour as your father time frame, and then try and enter off the 15-minute or 30-minute, right? So now you have the 15-minute entry, you have it trending up, and you're looking at the 4-hour. This is also trending up, so you can use the 15-minute as your entry for the 4-hour, or the 30-minute as your entry for the 4-hour time frame. So right here, so if you were looking at the 4-hour time frame to be your father time frame, the one that you're going to follow ultimately, the 30-minute is giving you an entry because you're having a bullish Kumo break. So right here would be the entry, and now you start looking at the 4-hour as being the time frame, the trend you want to follow. Okay, and then your risk is going to be under the 30-minute low or the Kaizen, whatever you prefer, regarding your risk. But you're using the 30-minute as your entry and your risk parameter, and then the 4-hour is your potential, your trend, the trend you're following. So in this case, if you're doing the 30-minute, you would put your stop, let's say, just under this low over here. We'll do this like right here. So like 23,898. Your risk would be just above 4%, or just maybe above or below slightly 4%. So very small for the potential reward off of the 4-hour move, right? So you're looking for a massive move. You're risking 4% for a massive move potentially. And now you're already now the risk reward is totally worth it. So now in the 30-minute, look where you originally got in over here. Look where you got in down here. So because you're following the 4-hour, the move on the 30-minute is so dramatic, you can quickly move your risk to break even. Make sense? So that you can do this on any time frame, but obviously you do want to keep into account that the 4-hour, the daily, those father trends, okay, these time frames are going to give you the best trending move because they're larger, right? You could do it on the 1 hour, same thing. If you do it on the 1 hour, you look for like a 5-minute or 15-minute entry. It's the same thing, and it works on anything that trends. But this is a really good way to control your risk, and it's something that's pretty consistent. As long as the asset you're trading trends, you can do this, and then you just keep your eye on the 4-hour and wait for it to pretty much give you the signal to get out. Now you can decide whatever your signal is. Some people like to use, if price breaks under the Tenkan-sen like it is now, they'll take a percentage off, or they wait for the Kaizen-sen, the red line, to be taken out, and then they close out the trade. Or if they're really, really aggressive and they want to try and get a really big move, they'll wait for the entire cloud to be lost before closing the trade, right? So you have to do whatever you feel comfortable with. It's not for anyone to tell you what's best, what's better. There's pros and cons to it all. The con is if you want to stay within the trade until the cloud gets taken out, but you have to deal with stuff like this where you leave a lot of money on the table when it reverses. The pros obviously are you stay in the trend much longer, and there are times where your trade can get massive. And then obviously the pros and cons for using the Tenkan and Kaizen, you get out of a trade much faster, so you can take profit much faster, you take a lot more money off the table quicker. But sometimes you'll get out of the trend trade too quickly, and you leave some behind. But that's okay. In my opinion, you probably want to take it here, because if you use the smaller time frame, again, you can just re-enter the trade, because all you want to see is the 4-hour uptrend in this case hold. So you can always go back down to like the 30-minute and 15-minute and look for an entry again, right? There's nothing telling you can't enter a trade again and again and again. All right. So that's pretty much what this is. I'm going to do a bigger video on this, but I wanted to quickly do like a live since I had a little bit of time. And I will put this up for a little bit, but I will take this video back down once the actual tutorial, like more in depth, comes out. But in case anyone wanted to try this strategy while they're waiting for that video, this is like a basic example. Same thing with shorts. It's literally the opposite. So anything that trends, crypto, stocks, commodities, this will work. So if anyone has any questions, I'm gonna kill the recording now. So if you have any questions, you can just hop on the mic or type it in, whatever, in regards to the strategy. If not, then yeah, that's all good. So I'm going to kill recording now. Guys, thank you for watching the recording if you couldn't make it live. Hopefully this piques your interest. Again, this is more of like a standalone video. This video is going to be preempting the big video. I'm going to do a much bigger tutorial video on this, similar to what I did on the Ichimoku basic strategy video. So be on the lookout for that. If you are interested in this strategy, but you have questions and you aren't here live, make sure to join the Discord, and you can ask me anytime. I'm very active on the Discord. And also, if you're interested in any of my services, check out the Patreon link in the description below. You'll also find a lot more details on that stuff there. All right, everyone, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.